Good morning, folks. Hope everyone out there is having a good week so far. Just about to get this all started here. All right, folks, welcome to this week's edition of Back to the Futures with me, Markets and Mayhem. And we just got a pretty interesting bit of data on that CPI reports, catalyzing a decent move higher in futures ahead of the market open. So we're going to be looking at that and a lot more, but first let's get through a couple of slides. First, the disclosure, and really the point here is don't risk more than you're willing to lose. I don't want to see anyone get hurt out there any more than anyone else. In fact, I'd like to see you guys succeed. And the biggest part of that is managing your risk first and foremost, having reasonable expectations of what you can make. And especially if you're earlier on in your journey of trading, realizing that this is more of a business. You're buying and selling inventory, hoping to capture the spread. It's not all lottos and Lambos. In fact, most of the people that get their mindset unrealistically skewed towards positive outcomes don't last very long in this game. And while it's been an easy trading environment overall, that's not always going to be the case. So, developing skills to understand how to adapt to different trading regimes is also going to be important. Now, a little bit about me. I've been trading for 20 years now. It's been a very interesting journey. I was fortunate enough to have some great mentorship early on. And my whole goal, getting onto social media, starting Traderade and otherwise, is trying to really bring that forward to as many people as I can. I want to pay that idea forward of generosity in sharing information and helping people have a better chance of success. And that's really the basis of what I do and why I do it. So, one of the things that's helped me in that approach to find better consistency and to overall take some of the emotion out of trading is focusing on having a more systematic approach. Using data like momentum, price action, options flow, sentiment, positioning, volume profile, and of course, the big picture. And so, what I've done over time is build tools to help guide my trading, as well as backtest and use models that are derived from that backtesting to guide some of my trading, particularly on the longer time frames. And I began working with Bookmap in early 2022 because I saw great value in the way their platform displays market data. It's amazing. It's already been 3.5 years working together, and it's been a great partnership. To that effect, if you want to check out Bookmap as a part of enjoying a pretty cool contest they've got going on, you can earn 3 months free of Global Plus using the hashtag FreeBlueJacket, sharing your winning setups using Bookmap. Now, the daily pivots for today on the S&P 500 September futures contract, we're looking at 6421.50. On the NASDAQ front month futures contract, 23721.25. We're above both those levels after that CPI data this morning. And we're going to be watching to see if this is a trading day where we have more of the move happening pre-market than during the regular session, or if what we had during the pre-market sets us up for a more interesting trading session. So I'm of the mind that it's probably going to be more sideways chop during today's trade, but I'm open to possibilities. I'm going to be watching the 20-minute opening range. I'm going to be watching the options flow and the overall price action, because even if I may come in with some idea of what might happen, I have to respect the market in front of me to be able to trade it. So while I have some idea, I'm going to let what plays out guide my trading. Now, looking at the SPX options visualizer levels here, overhead, we still have that call wall at 6,500. You still have larger desks looking for those higher prices in the S&P 500 cash index. That's about 100 points higher from where we're trading right now. And on the downside, we do have some pretty chunky support, 63.80, 63.75, 63.50. All of those areas are likely to provide some options-derived support before we get down to that all-important gamma flip level at 63.35. Remember, these are SPX levels. And then moving a bit lower, a big magnet at 6,300. If we did get a pull down there, it could take a bit of effort to get unstuck. And then finally, put wall, major support at 6,200. And a vol trigger at 6,000 that if we did somehow manage to get below, could unleash another wave of selling and increased price volatility. I'm not looking for any of that today. These are levels you can screenshot, you could take and use really for the better part of the week. So keep that in mind as we navigate this trading environment. And then just taking a look at our S&P 500 swing pivots chart. This is a chart that we have on our Traderade Discord that's updated live, and it shows these major inflection points on a swing time frame. We can see we're back above 6391.75. If you recall last week, that was our weekly pivot. And we can see just how important this level has been to the market and how it's deciding trend. So for now, on a swing time frame, the path of least resistance is higher. However, on the daily pivots, we are going to want to watch this 6421.50 on ES, and we're just pinging right above it right now, testing yesterday's hot call level and T2 plus level. Now, really quickly, we've got some exclusive deals to share. And the big one that I have to share with you today is getting up to 40% off of Bookmap using the URL traderade.com/bookmap. And when you get to that URL, scroll down to the bottom for the special offers. You can take advantage of this for your first billing period. All right, we're going to go right into Bookmap here. So give me a moment as I bring that on screen. And I'm also going to bring up just another chart here. This is my dynamic pivots. We mentioned that 6421 level. We can see that we are pinging it. Oh dear. We can see that we are pinging that level here. And just looking like that's going to be a pretty key area of support to watch. So folks, if you're watching this stream, I did have a image of just my avatar on there for a minute. I apologize about that. That has since been corrected. And we should be showing the live feed now. But you didn't miss a ton of stuff, just all the things that I went over verbally there. And that 64.21.25 pivot, that's going to be the level we watch to determine whether we're bullish above or bearish below. So that's really a pretty key level to watch as we navigate the trading day here. We did push right above it during that CPI release. It got a little bit exhaustive. That was the biggest amount of pre-market volume that we've seen in the last 4.5 hours during that candle. And after that, we've seen it come back down and settle here, looking a little bit exhausted. That subchart indicator here that poked into the red, that is a short-term momentum indicator, was showing a bit of exhaustion to the buy side, which is why it turns red, kind of giving you a warning. Hey, maybe you want to be a little careful with longs here, that you might be scalping. And indeed, that was the case. We can see that's now reset back into the neutral zone. And we are starting to balance above that pivot. Perhaps we'll make a push higher from there, particularly during regular trading hours. But that's something to watch. And going back into Bookmap here, we can see there was a little stop run recently as well. We can see selling aggression picking up just a little bit on this corrective move lower. Let's bring the whole move into the picture here. So you could see that reaction was pretty gappy. There wasn't a lot of liquidity on the order book, as is often the case during these event volatility catalysts. In fact, stacked bids and asks, just about 29,000. So not super liquid, hasn't been very liquid for a while. I remember when that level used to be on average 50 to 60,000. Now it's on average 25 to 35,000. So it's come down quite a bit over time. And that's left us with a market that at times is a lot less liquid in the way it discovers prices. And into that move lower, we also saw some light iceberg selling. Then we saw some of that seller aggression picking up, a bit of a stop run, and now we're balancing out here. It's going to be really interesting to watch the flow after the market opens. How much of this move is preserved? Do we retrace it and then start to build to move higher? So far, that is the look that we're seeing here. And we are still holding above that pivot. But if we broke below, it would look to me like we'd retrace that whole move right back to that point of control around 6,400. So we'll be watching that pre-market as well. We've got just about 17 and a half minutes until the market opens. And we do have some news coming in from China. China orders companies to halt NVIDIA chip orders. China orders companies to halt NVIDIA chip orders. Pre-market, that doesn't seem to be having much of an impact on NVIDIA shares. Their bid 0.1% higher. Let's check in on the NASDAQ futures this morning as well. NASDAQ futures have a similar look of the S&P. Nice reaction to that CPI data, although, again, to a pretty illiquid order book. So it's easier to move price in that environment to get these sort of gappy extreme moves. And when you do get those, you have a higher risk of retracing them, which indeed, that is what we're having. We're having kind of the opposite of what we used to have. We used to have the pop, or we used to have the drop and pop. Now we're having the pop and drop. And CPI data this morning wasn't bad. I think core year over year came in hotter than expected. Headline year over year came in cooler than expected. But we also have some questions about the validity of this data set. That is to say, there's much more inference happening. There's much less data collection happening as CPI is survey driven. And some of the cuts that happened at BLS reduced that gathering. Now, we could argue that CPI data has never been that accurate or even objective, but it's getting worse. And so that's another issue that we may have to take into consideration as the market prices this data set, how that reaction plays out. Will it have any conviction behind it, knowing that the rest of the market also is aware of this, that there is less accuracy in an already inaccurate data set? Let's also zoom out, look at the overnight session. So overnight was relatively uneventful, and often is the case when you have that period of consolidation, it sets us up for a more exciting trading environment during regular trading hours. So we'll see if that ends up being the case. We did get that sort of coiled spring look overnight hours, really 12 plus hours of consolidation. Got some of that energy released here with the CPI move, that coiled spring releasing some of that energy into the bid. And we can see, speaking of bids and offers, there's 410 contracts on offer at 64.50. Price couldn't get all the way up there. In fact, as that offer grew, price retreated. So that's another thing to keep in mind. That is a pretty large offer for pre-market, but it's also giving you a sense that at least during that moment in time, buyers didn't have the confidence or the demand to push higher through that confluence level of 64.50 and key 5 plus. Also interesting to note, super core CPI came in at 3.21% versus a prior reading of 3.02%. Month over month, super core CPI came in at 0.48% versus a prior reading of 0.21%. So some acceleration there in super core, which is supposed to be one of the less volatile sets of CPI data. So mixed bag overall in CPI. And looking at the S&P 500 heat map pre-market overall, just a nice little blanket of green throughout a lot of these components. Let me see if I can pull this out for you all to see as well. Yep, here we go. So this is the pre-market heat map from FinViz, and we're just seeing overall tech has a decent bid. Most of that tech showing green. Intel up 3.78% after the CEO that Trump called to resign, having what was described as an interesting meeting with the White House. So that company coming off its low. Still a troubled company, however. You also have Tesla getting bid up. Really a nice recovery off the bottom of that pattern that Tesla shares have. We look at that company. This looked like it was really wanting to break down here, but we are breaking to the upside of this pattern. We'll see if that lasts, but certainly this overall chart had a bearish look to it ahead of that move. Now, during today's session, we do have two Fed speakers, Barkin at 10 a.m. and Schmid at 10:30 a.m. Then a White House press briefing at 1 p.m. Eastern. And currently, just checking in on the indices ahead of the market open, just about 10 minutes away. We've got the Dow 30 bid up 0.4%, as well as the S&P 500, with the Nasdaq 100 bid up about 0.5%, and the Russell 2000 bid up 0.8%. So overall, a lot of green ahead of this market open. And let's go back to the other view we have via Motive Wave. Give me a second here. There we go. We are retesting that 64.21 pivot level, and we did get a bearish value gap indicator as well. So overall, starting to look like we may retrace even more of that post CPI move ahead of the market open. So, question: do the same principles apply to trade metals and currencies as well with Bookmap? I'd say that overall, yes, but it's important to realize that every instrument we trade has its own personality, and we need to become aware of that personality to better trade those instruments. So, gold trades a lot differently than Bitcoin, which trades a lot differently than oil, which trades a lot differently than the yen, which trades a lot differently than the S&P. Even the S&P and the Nasdaq trade quite a bit differently than each other. So I think if we can appreciate that nuance, the same overall order flow concepts are applicable. But we need to be aware of how these different participants and how these different markets trade to better be able to take advantage of them. That is to say, if we treat them all as if they are the same, then we could get chewed up and spit out on some of these that are more volatile or tend to have more exaggerated movements as a reaction to news or order flow. So the way I look at it is I like to get an idea of the inherent volatility of the instrument I'm trading. If I'm looking at something like Bitcoin or natural gas, I'm going to be taking smaller size, using wider stops, and really being a lot more of the mind of trying to capture some of that volatility, but not put as much liquidity at risk. If it's something more stable, like I'm trading the 10-year note futures or even the S&P 500, I'm willing to use larger size and more narrow stops because those instruments inherently tend to be less volatile. And as far as I know, with regards to currencies, it's largely currency futures that you would be able to trade in Bookmap. I don't believe yet it has direct currencies support, but I would rely on the team to weigh in on that. There is crypto, and I do look at Bitcoin, for example, through Bookmap, and that has been pretty helpful to finding potential areas of absorption, exhaustion, looking for where there's people leaning on the bid or the offer and how price reacts to those situations. Another question: where am I getting these pivots from? These pivots are derived from my dynamic pivots tool that's available exclusively to our Discord members. So this is one of these Traderade tools that I've coded up, and they work pretty darn well. You can see that major pivot was the stopping point where the downward move has halted a number of times. In fact, this was my weekly pivot last week, still quite valid this week as well. And the pivots are derived from analyzing volume, price action, and also just a couple of other things that my algo does as it generates two different types of pivots: major pivots, which are used for swing trading and are also more important levels to watch if you see them come up during the intraday, and then the normal pivots, those normal dynamic pivots, which are more for intraday trading. So they're available on streams for both the Nasdaq and the S&P 500 in both the intraday and daily time frame on our Discord, 23 hours a day. All right, we're going back into Bookmap here. We can still see sellers are somewhat aggressive for the pre-market tape. We've just got about 4 minutes left until the market opens here. Yeah, gold is really a lot of fun to trade. I swing trade gold and some of its miners as well. And it's still very much in this Bollinger Band squeeze to breakout expansion. That breakout started really late 2023, and it's been a pretty phenomenal trade to watch play out because the momentum, the price volatility continues overall in longer time frames to expand, and that typically portends to further expansion. Yes, we've had some turbulence over the last several trading sessions, but I don't think that changes the bigger picture. The bigger picture being gold is a hedge for uncertainty, and uncertainty is on the rise. And you also have greater concerns about economic slowdown happening. Gold tends to do well in that environment. So overall, I think we're in an environment where gold could see $4,000 an ounce later this year or early next. And that's kind of my base case. I'm also pretty bullish on silver. I think silver has a good chance to get back to its all-time highs around $48 an ounce. That was where it hit in 2011. Long time ago, dating myself a little bit here, even knowing that off the top of my head. But that is where I'd be looking for silver to get to once again, around $48 an ounce. Again, probably later this year, early next, especially if China does stimulate in any reasonable size, considering they're the second largest industrial user of silver, and most silver consumption is from industrial usage. It's about 2.5 minutes until the opening bell here. And we have the opening bell there getting just a little bit of a bid right off the opening bell. We're going to zoom in just a little more. See, there's some iceberg buying and selling into the opening bell. And that's one of the things that I always encourage a little bit of caution into the opening bell, trying to get too confident with which side you're going to take because there's this cross current of institutional flow. And it tends to be a pretty volatile time to execute with any confidence of directionality, which is why there's all these ideas of watching the opening range anywhere from 5 seconds all the way to the first hour of trading. Personally, I look at the first 20 minutes. That tends to backtest really quite well. I've been actually working on a Motive Wave add-on that I'll be putting out there, and then I'll make one for Bookmap as well that really maps out opening ranges and extensions based on user preference. So that's something to look forward to. I'll be giving that out for free once I have it ready. And folks, if you're out there watching, if you have any questions for me, do let me know. We're going to zoom in just a little bit more now. So far, the opening range microstructure is a bit heavy, lower highs, lower lows, kind of the theme we're seeing so far. But again, early yet. You do see some sellers here also just, they were sell side iceberging into that move. Haven't seen them shown up in this last pop though. And climbing right back up to where we opened and now making a push above. We can see that this order book is a little more bid heavy, 17,000 on the bid versus 13,000, now 12,000 on the offer, a delta of 4.8 thousand favoring buyers here. So the order book has a bit of a bullish imbalance so far. And we are pushing back above that key pivot level we talked about around 64.21. So more inclined to want to long into an environment that looks like this. Overhead, we do have that confluence zone between key 5 plus and 64.50. That could be an area where one may want to de-risk at least 2/3 of any longs being put on here. Let's take a look at the NASDAQ as well. And pretty strong conviction buying in the NASDAQ, those larger delta bubbles showing the difference between buyers and sellers. Buyers showing some decent aggression here as we pull above that point of control. Some tepid iceberg buying here as well. And the NASDAQ, like the S&P, there's a large offer overhead for the NASDAQ seeing 420 on offer is pretty chunky. So for any longs being put on this break above this initial balance and point of control, I'd be looking to core off around that large offer or even a point below it, because often is the case with an offer that large, you're going to see some resistance. And you'll note we do have the NDX options visualizer as well. That's an addition to the SPX options visualizer. These tools are pretty cool. They convert what's going on in the options chain for the S&P and the NASDAQ into actionable levels that you can map out for the futures contract. And that NDX options visualizer is about to go live. The SPX options visualizer is live and available for folks to add to their existing Bookmap or Motive Wave charting platforms. We can see more offers starting to stack above here as well. So it's really about auction theory. Do buyers have the demand to push us through that supply? So far, a little bit of hesitation. And you did see a decent 203 iceberg buy here as well. The SPX options visualizer is available at traderade.com/SPX. It's a data add-on. So you just pop it into Cloud Notes. You can set it to update as frequently as every minute. That's how frequently we update the flow. And the levels are updated every 2 minutes. And so it's available directly through us. Traderade.com/SPX for the SPX options visualizer. You can learn more there. And look forward to the NDX options visualizer as well as visualizers for SPY, Triple Q, IWM, and then after that, we're going to be doing the Mag 7 stocks. And once all that's rolled out, I'll be looking at other charting platforms as well. But for now, that'll all be available on Bookmap and Motive Wave with major data providers. It looks like buyers are going to give this offer just overhead a test here. Seeing a little bit more buying aggression starting to come in. I'd like to see a determined push above. I'm still looking for 64.50 to the upside here for a level to take off a core position in an intraday scalping mission. You could see, wow, big offer just coming in overhead, over 1,000 contracts coming in just overhead, and buyers not yet deterred by this. So that's a good look. Let's see if they can push through. They're absorbing some of it here. There they go. Part of that offer was pulled. They absorbed the rest of it. So buyers showing some confidence. That's also the most aggressive buy side delta bubble we've seen. Let's just pull back. Yeah, this whole regular trading hour session. So let's see if we can pick up to that key 5 plus 64.50 confluence area. I think we will. Let's also zoom out just a little bit here. See how we're basically just retracing the CPI move if we do that. That's what I wanted to show. So it looks pretty likely that we could make that happen. Often what you see when buyers take out a really big offer zone is they'll consolidate for a bit if they intend to challenge the next one. What you don't want to see is an immediate move lower, like, hey, we took out this big offer, but now we don't have enough demand to keep going. That's a little more discouraging. What we're seeing here is constructive. There's this sideways consolidation that's happening after absorbing that large offer zone. So that's giving you a sense that buyers are sort of regrouping and likely getting ready to make that next push. Also, not seeing nearly as much interest in lower prices, which is a little bit of a tell. So we'll see how this goes, but I'm still looking for 64.50 here. It's a part of the AM session. We got about 20 minutes left on the stream. Let's see if we can get it. And we're going to very quickly go back to our other chart here. So we can see how we balanced at our pivot level. We did look like we were threatening to take it out, but we were actually able to hold. Looked like a bit more of a head fake, look below, and then we bounced back above, made that push above yesterday's most active call strike, and we saw a bullish fair value gap emerge and some continuation higher here. So really, we're looking for a move up to what's now become key 4 plus. Just be a little bit higher than the 64.43.75 pivot, which also may offer a little bit of resistance on the way higher. You can see some interest building in higher prices as well. Now a new offer emerging at 64.65. But overall, this price action is constructive. We have an offer just overhead at 64.40. Buyers are not running away from that. They look ready to challenge that and likely absorb it next. You can see just healthy sideways consolidation here. Sort of a spring coiling up, getting ready to release that energy in its next move. Let's check in on the NASDAQ here as well. NASDAQ actually looking a little bit more sprightly than the S&P 500 futures, or the SPOOs as some would call them. Just challenging the key 2 plus level and getting closer to that 441 offer, having grown to that level from 420 earlier. That's also a level where I'd be looking at de-risking just below. But so far, looking constructive. And the move overall is one of higher lows and higher highs. That's also a good look from a micro trend perspective. And getting a bit of a pull here. Right down to our pivot and testing below. Some volume in this move as well. That's a larger delta candle that we saw just there. Let's go back to our chart here. We can see we're getting right back to that pivot level. Would not want to see it cross below that in the BGL or EMA 21. Also got a bearish fair value gap starting to print here. Maybe. Could see how the market really does like respecting these pivot levels. One way or another, you can see it's an area where there's a decision being made. That was really my point behind making them. Rather than going through and looking at charts and trying to, create these horizontal areas of support and resistance by eye, why not have it be automated, algorithmic, and something that can iteratively evolve and get better over time, saving us time as traders so we can use that mental capital to focus on the market in front of us. Trump headline coming through probably explains this move. I am considering allowing a major lawsuit against Powell. That helped to make that pull lower happen. Again, Trump saying, I am considering allowing a major lawsuit against Powell. So I'm being asked what I think of NVIDIA. I would be cautious of NVIDIA ahead of earnings. It has a chart pattern that makes me a little bit nervous, this sort of rising wedge. And, while the company is executing well, there are headwinds to keep in mind here. Increasing competition is one of them, and the potential for further margin compression, especially as they go to more complex offerings. And as competition also begins to heat up. Now, we're just going to shift back to the headlines here because we're getting more headlines from the President of the United States. Trump going on to say, I would sue Powell over construction of Fed buildings. He's also going on to say, Jerome, too late, Powell must now lower the rate. So these being posted on Truth Social and certainly adding to our chopatility during this trading session. So back to NVIDIA for a second. I would just say overall with NVIDIA, I think the company has had a fantastic run. It's certainly surpassed even, some of the bulls' wildest expectations as to where it could go this year. But I think any company, regardless of how well it's doing, once you start getting closer to earnings, it's a good time to be a little more careful if you're just trading it. If you're investing, that's totally different. You're looking at it as a long run opportunity. But I personally am one that doesn't favor making binary bets into earnings. It just generally is more akin to gambling than trading for me. So those headlines have kind of changed the mood of this market. It is once again concerned because we have a president that is coming out there and saying things that, well, would concern this market. Another headline coming in saying, and this is probably the more complete version, I am considering allowing a major lawsuit against Powell to proceed because of the horrible and, as he puts it, grossly incompetent job he has done in managing the construction of the Fed buildings. Now, recall weeks ago, Trump visited Powell at that construction site, complimented him, and it seemed like there was progress made. Certainly none of this was coming out at the time, but now we're seeing this stirring up consternation in the market. We got another bearish fair value gap, and we're seeing continuation lower below that pivot. So remember, I talked about bullish above, bearish below 6421.25. This headline changes the game. Price action is taking us back below that pivot and with some volume. Let's go back to Bookmap here. You can see we're making new session lows for the regular trading hours session. We had a decent stop run on both of these moves lower. 619 stops or contracts stopped out on that first impulse move lower. And then on the second impulse move lower, 461 contracts stopped out, making new session lows. We can also see we have another larger offer overhead here, just above 64.40 with 536 on offer. So this is the risk of the market we're in now. And if you didn't really start trading And if you weren't trading during Trump's first term, you probably don't remember stuff like this. But now that we've been, you know, 7 months into his second term, you're probably starting to get a sense that that tail risk from headlines at any given moment is a real thing. It can be a bullish event. You can get a huge bid out of it. And it can be, like we're seeing now, a bearish event. And you see the market roll over. We're down 30 points here in really a matter of minutes. So you got that really positive CPI reaction. We were bid into that. We retraced a little bit of it. Let's go back here. We can kind of talk through what we've seen. So there's that really bullish CPI move higher. You had a bit of a retrace. Regular trading hours took us back to about that high, maybe just a slight bit lower. And then the Trump headlines took us right back down, looking like we're going to, again, retrace that entire CPI move back to the point of control here. That's the look that this chart has now. It's pretty heavy. We've also crushed that pivot to the downside, as we can see here, and we're getting downside continuation from dropping below the 6421.25 pivot and its confluence with the BGL. That's the big green line. It's a 21 EMA on a 5-minute chart. It's a very helpful little momentum indicator. But what we can say here is there's a number of things that give us a sense that volatility is going to pick up. You had this big outside candle. You had that bearish fair value gap. You had the break below the BGL. And earlier, as a reaction to CPI, you did show a bit of momentum being extended. So far, sellers taking control of price action here, looking like that magnet level could be the next stop, but I wouldn't be too surprised if we get down to this major pivot, the 6391.75. That is a swing pivot. That's a level where I'd expect there to be pretty good support. Certainly over the last 2 weeks, it's provided as much. So I would expect similar today. And we are starting to see flow coming through from the SPX options visualizer. This is flow coming through the SPX contract right now. There's a little bit more volume at the two most active call strikes and put strikes at the moment here. But it is early yet. I want to see this flow evolve a little bit more before we start to discern where flows are giving an edge to which party, buyers or sellers, or really call buyers or put buyers. But the impact is one and the same. When that flow hits, you have market makers that have to hedge out that delta in near time. And in doing so, if there's an excess of calls, you typically are going to get more buying from that delta hedging. It's liquidity positive. Just like if there's an excess of puts, typically you're going to see more of that liquidity removal or bearish price action. That's why we look at the top two call and put strikes to get a sense as to where that volume is coming in. So right now, the top two call strikes outpacing the puts. But again, the nuance there is it's early yet. Let's wait for a little more flow to come in. Now, also important to recall that there is no Fed meeting in August. We have Jackson Hole. The next Fed meeting is in September. So Powell would have to do an emergency rate cut, which is extraordinarily unlikely. There's nothing exigent enough to provoke him to do an emergency rate cut here. So all this provocation is really for nothing. Perhaps a bit of a distraction, who knows? But whatever the case may be, you can see what happens when those sorts of headlines hit. It takes the bottom out. You get a lot less confidence. And that still, this is a trend of lower highs and lower lows so far from that event. Before, we were actually looking pretty constructive going into today. You could see there was a nice bid off the open. You saw some positive iceberging, but it's just as soon as that headline hit, the whole narrative changed. Now, the further back the headline goes in the memory hole, the more the market's able to bid away from it. So as long as Trump doesn't keep saying this stuff, you'll probably get some kind of recovery because A, You're seeing the reaction function of the market becoming less and less intense to these type of headlines. It's like it's becoming gradually a little more immune, trying to parse which one of these should we take seriously, which one of these is just more saber rattling. And so we are getting a little bid off the lows. And I think some of that is as it gets more distant in the rear view mirror, people start to question, does this really matter today? Does this matter for how we're pricing the S&P 500 right now? And the answer to that is probably it does not. Got about 4 minutes left in the live stream here. Appreciate you all tuning in. It's always fun when we get some live data coming through like that, and then we get some crazy headlines as well. So I think that we are setting up for a day where the path of least resistance is a bit of chop. I still wouldn't be too surprised if we get an upside pull, particularly in the PM session. And a lot of that predicated on Trump not saying other things that upset the market. Like if we have a continuous stream of consciousness where it's this and that issue kind of being exacerbated, then throw all that out the window. But if that starts to fade into the background, I think the path of least resistance is sideways to higher. And I'd like to see that call flow continue to suggest that. Right now, the two most active call strikes, almost 2 to 1 to the two most active put strikes. That's 8,000 and 7,000 or 15,000 versus a total of 8,000 on puts. So far, looking good. Again, I'd like to see a little more of that flow come through to suggest the same. But it is looking to me like we've already kind of carved out a decent trading range. Maybe we'll get pulled out of it to the upside if we can break above these larger offers overhead. And the downside, the risk is that we continue to get negative headlines. Also important to note, we've got two Fed speakers coming up. Fed's Barkin at 10, Fed's Schmid at 10:30 a.m. And then a White House press briefing, whatever with that may come. So be aware at 1 p.m. And no real treasury auctions of interest here. We have some bill auctions coming up for 17-week, 4-week, and 8 weeks. That's about it that I see on the docket for today. I do think if there was an actual lawsuit that was filed and this whole thing became like a judicial circus, that would be a problem. That would probably undermine confidence and you'd see some more de-risking. But for now, it is just an idea, a trial balloon that's being floated to see what the reaction is by the media, by the Fed, etc. So unless and until there's something filed in court, I don't think we need to take this particular headline at face value. Rather, just there's this idea floating around that they're testing that maybe they'll do something more aggressive to try to twist Powell's arm. The irony here is that the Fed is likely set to cut by 25 basis points in September. And the more that there's this pressure coming in that would make the Fed at least appear less independent, the less likely is that you get that cut. Like really, Trump ideally needs to stop telling Powell what to do so Powell can do his job and not appear to be under the influence of the president. That's my thinking on it. That is analysis that's based on what I've heard from Powell as well, just reading between the lines. So, folks, that's going to do it for this week's back to the futures. If you want to learn more about what I'm up to and check out some of these awesome trading tools, visit Traderade.com. If you'd like to check out the SPX options visualizer, that's Traderade.com/SPX. And then finally, to get up to 40% off Bookmap, visit Traderade.com/Bookmap. Thank you all for tuning in. I'll be back next week, Tuesday at 9 a.m. Eastern.